You know what's interesting? Your bank knows exactly when you're most vulnerable. They know when your paycheck hits. They know when your rent is due. They know the exact moment you're going to overdraft. And they've built an entire system around timing that works in their favor, not yours. But here's what they don't tell you. Timing works both ways. There's this thing I stumbled across a few years ago when I was obsessively checking my bank account every morning, watching numbers appear and disappear like some kind of financial magic trick. I started noticing patterns, delays, holds, weird gaps between when I sent money and when it actually moved. And that's when I realized something that changed how I think about banking entirely. The 72-hour window. 3 days. That's the invisible battlefield where your money either works for you or against you. And most people have no idea it even exists. We've been conditioned to think about banking as this neutral, passive thing. You deposit money. It sits there. You withdraw it when you need it. Simple, right? Wrong. Banks don't operate in real time, even though your anxiety about money definitely does. When you transfer money, when you pay a bill, when someone pays you, none of that happens instantly. Even in 2026, there's always a delay. And during that delay, something fascinating happens. The bank is using your money. Now, I'm not talking about some conspiracy theory here. This is literally how the banking system works. It's called a float. While your money is in transit, while it's being processed, it's generating interest for the bank, not for you. For them. Think about the last time you deposited a check or transferred money between accounts. You probably saw something like available balance versus current balance. Ever wonder why those numbers are different? It's because the bank is holding your money in a kind of financial purgatory where they can use it, but you can't. Here's what makes this even more frustrating. When you spend money, that transaction often processes immediately. But when you receive money, suddenly everything needs 3 to 5 business days to clear. It's not an accident. It's not a technical limitation. It's a design choice. And once you understand the timing game banks are playing, you can start playing it too. Let me break down what's actually happening during those 72 hours, because understanding the mechanics is what gives you power. When you deposit money, let's say a check, from your freelance work or a payment from a client, the bank doesn't just add it to your account and call it a day. They put a hold on it. Sometimes 2 days, sometimes 5. Sometimes, if it's a large amount, even longer. During this whole period, your money exists in this weird limbo state. You can see it in your account, but you can't use it. Meanwhile, the bank absolutely can use it. They're lending it out, investing it, making money off your money while you're sitting there waiting to pay your electric bill. Now here's where the psychology gets interesting. Most people operate in reactive mode with their money. Something comes in, something goes out. There's no strategy, no timing, no awareness of these invisible windows. And that reactive mode costs you in ways you don't even realize. Let me give you a real example. Sarah gets paid every other Friday. Her rent is due on the 1st of the month. She's living paycheck to paycheck, so timing matters. If her paycheck hits on the 28th and her rent auto-pays on the 1st, she's fine. But if there's any delay in that deposit clearing, if the bank puts even a 24-hour hold on it, she could overdraft. And that overdraft fee? $35. Sometimes more. Now, the bank will tell you this is about risk management and fraud prevention. And sure, some of that is true. But ask yourself this. Why does the money you spend leave your account immediately, while the money you receive takes days to arrive? The answer is simple. Because immediate debits and delayed credits benefit the bank. But here's what changes everything. You can use this same timing logic to protect yourself. The 72-hour rule is really about understanding the rhythm of money movement and positioning yourself strategically within it. It's about knowing that money doesn't move when you think it does, and using that knowledge to create buffers, avoid fees, and keep more of what you earn. Let's talk about deposits first. When you deposit money, you need to think 3 days ahead. Not tomorrow, not next week. 3 days. If you have a bill due on Thursday, your deposit needs to hit by Monday at the absolute latest. Not Tuesday. Not Wednesday morning. Monday. Why? Because even if the bank says funds available next business day, that doesn't mean the money is actually settled. It means they're giving you access to it. But behind the scenes, they're still holding the real transaction in processing. If something goes wrong, if there's an issue with the source of the funds, if there's a reversal, if literally anything unexpected happens, the bank can and will pull that money back out of your account. And if you've already spent it, you're negative. And you're paying fees. Now let's talk about withdrawals and payments. This is where most people get wrecked. They see money in their available balance and think, great, I can spend this. But your available balance is a lie, or at least it's an incomplete truth. Your available balance includes pending deposits that haven't actually cleared. It includes money that's technically yours, but could still be reversed. And if you spend based on that number without understanding what's actually settled versus what's just pending, you're setting yourself up for overdrafts. Here's the move. Always operate based on your clear balance, not your available balance. I know that sounds restrictive, and honestly, it kind of is. But it's also the difference between paying $35 fees every month and keeping that money in your pocket. There's another layer to this that almost nobody talks about. Transaction timing. When you make a purchase with your debit card, that transaction doesn't process immediately. It shows up as pending. And during that pending period, the merchant hasn't actually been paid yet. The money is just reserved. This creates an interesting window. If you have multiple pending transactions, they usually all process at the end of the day in one batch. And here's the kicker: banks often process them largest to smallest, not chronologically, not in the order you made them, largest to smallest. Why? Because that maximizes overdraft fees. If you have $100 in your account and you make 3 purchases, $10, $15, and $90, the bank processes the $90 one first. Now you're overdrawn. Then they process the $15 one, another fee. Then the $10 one, another fee. 3 overdraft fees instead of 1, all because of the order they chose to process your transactions. Is this legal? Unfortunately, yes. Is it ethical? That's a different question. But once you know this is how the game works, you can play defense. You can monitor pending transactions and make sure you have enough cleared funds to cover everything before it all processes at once. You can time your purchases to happen after you know your deposit has fully cleared, not just shown up as available. Here's the mindset shift that changed everything for me. Your bank account is not a real-time reflection of your money. It's a delayed, processed, strategically timed version of your money. Once I accepted that, I stopped reacting and started planning. I stopped checking my balance constantly and started tracking my actual cleared funds. I stopped trusting available balance and started building a buffer. And that buffer is everything. Because when you have even just $100 or $200 of cushion in your checking account, money that you mentally don't count as spendable, you're no longer playing defense against the 72-hour window. You're insulated from it. Think about it like this. The bank wants you to operate with zero margin for error. They want you to spend every dollar as soon as it appears available, because that's when you're most likely to make a timing mistake and trigger a fee. But if you operate with a buffer, if you give yourself room for the delays and the holds and the processing times, suddenly the timing games don't hurt you anymore. This isn't about having more money. I'm not saying you need to be rich to make this work. I'm saying you need to think about your money differently. You need to account for the invisible 72-hour delay in everything. When you get paid, mentally, that money isn't spendable for 3 days. When you pay a bill, assume it's going to pull from your account immediately, even if it doesn't show up as processed yet. When you see your available balance, subtract any pending deposits and pending debits before you trust that number. It sounds paranoid, but it's actually just realistic. Because the system is designed to catch you on timing errors, and the only way to win is to stop making timing errors. So what does this actually look like in practice? How do you use the 72-hour rule to protect yourself? First, map out your money rhythm. When do you get paid? When are your bills due? What's the actual real-world gap between those two things? Not the gap you hope exists, the gap that actually exists when you account for processing times and holds. If that gap is tight, you need to either change when your bills are due or build in a buffer. Call your landlord, your utility company, your credit card issuer. Most of them will let you adjust your due date. Move everything to at least 5 days after your paycheck clears. Not hits your account, clears. Second, stop using your available balance as your spending guide. I know your banking app shows it right there at the top in big numbers, and I know it's tempting to trust it. But don't. Instead, track your clear balance manually if you have to. Some apps will show you both. Use the lower number. Third, build a buffer, even if it's small. Start with $50. Just $50 that you pretend doesn't exist. Money that sits in your checking account, but that you mentally categorize as untouchable. That buffer is your protection against the timing gaps. It's your insurance policy against overdrafts. Once you have 50, try to get to 100, then 200. You're not trying to save a fortune in your checking account. That's what savings accounts are for. You're just trying to create enough space that the 72-hour delays can't hurt you. And finally, pay attention to when you spend. If you know your paycheck deposits on Friday, but won't fully clear until Monday, don't make big purchases on Friday night. Wait until Tuesday. I know that sounds overly cautious, but one $35 overdraft fee wipes out any benefit you got from buying something a few days earlier. This is about playing the long game. Every fee you avoid is money you keep. Every timing mistake you prevent is financial breathing room you create. Look, I get it. It's exhausting to have to think this strategically about something as basic as your checking account. It shouldn't be this complicated. You shouldn't have to play defense against your own bank. But the reality is, the system is designed to benefit from your mistakes. And the most common mistake people make is not understanding that money doesn't move in real time. The 72-hour rule isn't about gaming the system or finding some loophole. It's just about understanding how the system actually works and protecting yourself within it. It's about thinking 3 days ahead instead of reacting in the moment. And here's the thing, once you start operating this way, once you build that buffer and start timing things strategically, something shifts. You stop feeling anxious every time you check your account. You stop wondering if a transaction is going to overdraft you. You stop living in that constant low-level financial stress that so many of us have just accepted as normal. Because it's not normal. It's just what happens when you don't understand the timing. You don't need to be perfect at this. You don't need to track every dollar down to the cent or build a complicated spreadsheet. You just need to be aware. Aware that there's a delay. Aware that your bank is using that delay to their advantage. And aware that you can use the same knowledge to protect yourself. Progress beats perfection. Always. A $50 buffer is better than no buffer. Waiting one extra day to make a purchase is better than overdrafting. Knowing your clear balance is better than trusting your available balance blindly. Small changes. Strategic timing. That's all this is. And if this changed how you think about your bank account, do me a favor, hit that subscribe button. I make videos like this because I think people deserve to understand how money actually works, not just how we're told it works. And if you found this helpful, leave a comment and let me know. I read every single one, and honestly, your stories and questions help me figure out what to make next. You've got this. Just think 3 days ahead. That's the rule.